Hello there, I'm James, you're watching Accounting Stuff, and in this video I'll attempt to explain the trial balance in less than 2 minutes. Can it be done? Let's find out. What is a trial balance? A trial balance, or TB, is an accounting report that shows a list of all ledger accounts and their balances at a point in time. It's used internally by businesses to check that total debits are equal to total credits. What does a trial balance look like? We start with a complete list of accounts in the general ledger. These are usually arranged by type, so we have assets, liabilities, equity, revenue, and expenses. Businesses often like to give each account a code to keep things organized. Assets might get the 1s, liabilities the 2s, equity the 3s, revenue the 4s, and expenses the 5s. At this point, we're basically looking at a chart of accounts. To turn it into a trial balance, we need the balances. So let's add 2 more columns, one for debits and one for credits. Debits go on the left and credits go on the right. The trial balance always has to balance, so the total of the debit column must equal the total of the credit column. But what if that's not the case? What do you do if a trial balance does not balance? Let me explain with an example. Luke Skyrouter runs a retail business selling electronic supplies across the Outer Rim. This is their trial balance on March 31st. At first glance, it looks fine, but let's check the totals. On the left, total debits add up to $1,211,900. And on the right, total credits are $1,219,100. Oh dear. That means our trial balance is out of balance by $7,200. Let's investigate. A good first step is to scan for balances that don't look right. Well, there's one issue that immediately jumps out to me. Can you spot it? It's interest expenses. Interest expenses is a normal debit account, so we'd expect it to have a debit balance. But in this TB, it has a credit balance of $5,500. Now that's unusual. Let's dig a little deeper and look into the account transactions from January to March. As you can see, there are 4 transactions. 3 relate to interest incurred, and they've all been correctly debited. I've got no problem with these. But I do have a problem with the $9,100 credit on March 15th. Let's bring up the journal entry. The description says it represents a $1,900 receipt of payment from a customer on account. That raises not 1, but 2 red flags. First, if a customer pays their account, we'd expect to debit cash and credit accounts receivable, not interest expenses. And second, it looks like we've got a transposition error. The amount should be $1,900, not $9,100. No worries, we can fix this. Yeah. First, we need to reverse the incorrect journal entry by posting the exact opposite. So we credit cash by $1,900 and debit interest expenses by $9,100. This removes the incorrect posting. Next, we need to record the correct journal entry. We debit cash by $1,900 and credit accounts receivable by $1,900. If we go back to our interest expenses account, we now see a debit balance of $3,600, which is what we'd expect for an expense account. And when we run a new trial balance, the total debits and credits are now both $1,213,600. Phew! The trial balance is balanced. One last thing to remember, just because a trial balance balances, it doesn't mean that everything is correct. A trial balance won't catch things like missing transactions or incorrect account classifications, or errors where the debits and credits still balance. Spotting those is down to you, the accountant. Once you're happy with the trial balance, you can use it to prepare financial statements, like the income statement and the balance sheet. I explain exactly how to do that in these videos here, so check them out if you want to see how everything fits together. I've also put together a trial balance cheat sheet, which you can find at accountingstuff.com/shop. Thanks for watching and see you soon.